Yes. Hi. Good morning. Nice. Yeah. So this is my fifth time at the Traders Carnival, fifth time on stage, fifth time trading live as well, right? And I've been talking about the same strategy every single time. It's been very repetitive for me as well. Plus, this time around, there's a lot of people from my community, a lot of my mentees who have been trading for a very long time and making profits with the same strategy. A lot of people who have been subscribed to my automatic trading facility as well. Again, almost selling or doing this similar strategy again, right? So it feels very repetitive and redundant to be on stage and talk about that strategy again. So today, it will be different. I'll talk about my journey, my story of how I started, and I started trading with a CR of capital, and how I reached or how I'm trading today with over 120 CR of capital, right? So how that transformation happened? How did trading, how did the way I looked at trading change when I scaled up the capital, right? But before that, I would like to understand the room. How many people who are from the community? Show of hands, maybe. Sure. Amazing. How many people have already heard my strategy from videos, from multiple events? Again, and how many people are profitable by trading the same strategy? Exactly right. So what I'm going to talk about is a very simple option selling strategy, and success is sure if you do that. There's no question because it's a very simple strategy based on pure money management and risk management, right? I mean, I always tell I became a millionaire by selling penny options. In my life, I've sold options below 10 rupees. 7 rupees, 6 rupees, 8 rupees. I've been selling that and I've made millions with that. Because the probability of those premiums to go to zero is very high. So it's just that you need to have statistical advantage to win over the long term. And that's exactly what I'll be talking about, right? So let me get into the presentation. But everywhere, wherever I go to, I talk about this first. I'm very sorry. Yeah, I talk about this first, right? Which is perspective. I mean, when people think about trading, when people get into trading, mostly it is by seeing someone else's P&L screenshot or with a high aspiration of that, hey, I want to make a lot of money, right? I don't think, I mean, at least according to me, I don't think that's the right way of looking at it. There are two ways, two perspectives to look at trading. That is why trading. Why do you get into trading, right? One is you can look at trading as, hey, I want to grow my money with it. As simple as that. I have some capital. That capital could be put into a mutual fund or a PMS where you get what? If the market goes up, you make 10, 15%. But if you put the same money into trading, you can probably grow it at what? 40, 50% a year. So that's one way of looking at trading where you want to grow your money over time. And that's my perspective. But then there's the other side of it where, say, in the money option sellers or say option buyers, where it is risky, but hey, you can probably make a fortune there, right? That's another way of trading. So when I talk about trading, it's this perspective that I always talk about, which is growing your money at a much exponential rate, kind of doubling your money every 2 years, and that over a long period of time can change your life. And that's what I want to talk about today, right? I see trading the way I do as a professional business I do, with no tension, very less tensions and risks and variables attached to it, which it can lead to a loss, right? So that's the perspective I want to talk about. So I said this, right? Today is not just going to be the strategy that I'll be talking about. It's going to be very personal. It's going to be my story, right? So this is how I traded over the last 2 years, right? Almost all my trades have been public, right? People in the community. All my trades have been posting either on Discord or on my app. My trades have always been public. So with simple trades and the same strategy, exact same strategy that I trade, I've been saying that on stage for the last 4 Traders Carnival. Absolutely open and blunt about it. And even after explaining the strategy, I asked them, hey, join my Discord or my app for free, where I'll be sharing the trades also. Simply trading those trades have generated over 100% ROI in the last 2 years. Now, a financial year is ending. I mean, yesterday was officially the very last day for me in the financial year. Tomorrow is, I consider it as the next financial year. I mean, I'm a positional trader, positional option seller, so I won't be exiting anything tomorrow. So I take this as an occasion to show my performance, go to my broker's dashboard and show my performance in the last financial year as well, right? So I trade in the broker FIRES. Yep. Right, so they have verified P&L now, so that's good to have, I believe. That's in the trend nowadays. So I'll select from April 1st, 2022 to yesterday, right? Oh yeah, so this is all. I'll just change it to FNO. Cool. So 1.39 CR is what was made from option selling, the way I do, with a 2 CR capital. Yeah. So that 2 CR capital. So, and it's all selling penny options, under 10 rupees options. And I believe that being open, honest, and blunt about this is very important, right? And I've been doing this for the last 3 financial years. Everything is there. I put it on YouTube as well. I put all my trades also public, just to demonstrate that trading is easy. If you have the right perspective, if you look at it the way of that you just want to grow your money, you don't want the kick of it, the addiction of it, and want to make a fortune out of it, then it's very easy. All you need is perseverance, right? So that's that. So this is on a capital of 2 CR, but then the percentage works out to be really high. But then 2 CR was the beginning capital in the last financial year. Then it scaled over the end of the year. Yesterday I was trading with slightly above 3 CR capital. So it scaled up during the year. So let's assume the average capital deployed in the last year was 2.5 CR, right? Even then it is a healthy 55% ROI in the last year. Right, again the whole point is it's easy, and that's exactly what I am going to talk about and how I made it even better for me so that I could scale it and run an even larger business with it. Now what I did is I took that system, and now this is what I'm going to talk about today. I used to trade with discretion, a lot of discretion. I used to decide, hey, what to sell, what strike to enter, what to buy, everything, when to modify. It was all discretion. I had to sit in front of the system. I had to decide everything for myself. Now what happened over the last 1 year is beautiful. I took my discretion, I coded my discretion, I made it into a system, I started backtesting it, I started introducing a lot of variables into it, a lot of technical analysis, a lot of Greek analysis into my discretion-based option selling, and I made a system. And backtesting the system over the last 2 years, the system, this is the backtest report, by the way, it generated 130% ROI. Now, even I have shifted from my discretion into this system, right? And that's what I'm going to talk about today. What was my original strategy? How I went about it? How I made it into a system? And the struggles that I had when I converted discretion into a system. And also the question, why did I shift to a system, right? I'll also talk about that. Now, why I shifted to a system is mostly, mostly because of this, right? If I was just trading for myself, if I was just trading with my 2-3 CR of capital, then I could have traded discretion, right? But then now the strategies that I have developed, or we have developed as a team over the last 1 year, we currently have some nearly 5 strategies developed. Once we got into backtesting, it was a whole new world which opened for me. Whatever I could imagine, I could convert it into code, and I could get a backtest, and I could quickly change, quickly think about new things, incorporate into the strategies, test again. Again, if I feel something's wrong, I could test again, and then we perfected nearly 5 strategies. The 5 strategies that we currently have are deployed in over 120 crores in nearly 1,000 plus users, right? So that's happening today. Now, this scale I could achieve, I mean, I'm not saying that everyone has to scale like this, right? But I hope at some point, if you strive for excellence, then you have to think that, hey, you have to trade with some higher capital at some point, right? Today, I could do this only because I made this shift from discretionary trading to pure quant-based systematic trading. And that's the strategy I'll talk about today. Cool. Something new at least, basically? Yeah, something new? Yeah, amazing. Yeah, so this would be the content. I'll quickly go through this. Number one is the fact that with option selling and selling without taking much risk, you can still make nearly 50% returns per annum. Number two would be the foundation of the strategies with discretion. Now, I'm going through my journey, right? I'll talk about that foundation strategy that I had, which I've been trading for the last two and a half years and consistently giving me profits. We'll be talking about the foundation of the strategy. Then I'll talk about the upgrades I did over time. I'll talk about why it had to be converted into a system, and finally the initial struggles of transition. I mean, trust me when I say this, when I transitioned from a discretionary trader to a system-based trader, it was very difficult. I mean, I'm looking markets going down, and there's a put being sold. If I was a discretionary trader there, I would have exited the put. And I'm looking at the system and it's not even exiting, right? So things are there. So when you start trading a system, being a discretionary trader, it's very difficult. The initial days are absolutely difficult. I had conversation with many yesterday who had similar doubts as well, right? So we'll be talking about those as well. Yeah, so a bit about me. Again, a lot of you know about me, but still, again, if I have to talk about myself, hey, my name is Sharik Shamsuddin, if you didn't know. I come from Kerala, God's own country, but I'm settled in Bangalore now. I have over 1 million followers on YouTube, again, because I talked about trading very honestly showing everything, absolutely being transparent about my journey. Today, I also run a company called Market Feed, right? So this is the company that I run. It's funded by Y Combinator. We have also raised a seed fund of over $2.5 million. And what we do is our IP is trading strategies. We are a full-blown quant research firm. We develop strategies and we help to run these strategies in your accounts, either manually or if you want it fully automated, we can run it fully automated for you as well. That's what we do currently. So when we say manually, what happens is, say if you subscribe to a strategy, whenever there is a trade that you have to do, you'll get a WhatsApp message, you'll get a call, you just have to approve there and the trade would automatically get placed in your account. If you want to trade it automatically, then hey, it's easy, right? It'll just, all the trades will just run in your account automatically. But hey, our IP again is trading, I mean the the quant strategies that we develop plus the tech that is associated with that. Cool. Now why option selling, right? I mean, this is exactly what I was talking about in the beginning. Option selling, I mean, forget option selling, option buying, futures, whatever, right? Like forget everything. I mean, you have some money with you. What do you want to do with that? You want to make some more money with it, right? I don't think you have to attach a name or emotions to what you do. I think what makes sense at the end of the day is the fact that, hey, you had X amount of money, you made it 1.5x in a year maybe. That is what makes sense. In what way? In the most peaceful, happy manner, right? That's what I believe. I was talking about the same yesterday on stage as well, right? When I was trading live. I believe that it's just one life that we have, and that life has to be peaceful and happy, and you should be content with it, right? And that's how I see trading. Doesn't matter what name you attach, what matters is how happy and how comfortable are you, right? And that's why I go with option selling, because you don't have to sit down and think, hey, where will Nifty go to today? Or where will Nifty go to in the next 5 minutes, next 10 minutes? You don't have to worry about that. In option selling, you can make money by having an understanding of where will Nifty not go to, right? You sell a 18,000 call for the next week, some good premiums there, Nifty doesn't go to 18,000, you make money. As simple as that. I mean, it's much easier if you think about it to guess where will something not go to rather than exactly predicting where will something go to. And that is the foundation of option selling, and that's how I figured out option selling. That's how I got into it, right? Now, this is what I want you to focus more on, which is with option selling, again, don't attach names to it, see it as a business, right? I see a lot of, probably being from Kerala, I see a lot of expats, right? Expats coming back from the Gulf, right? Back to home state, and they want to start a business, right? What business do they plan to start? Probably they want to start a restaurant, or they want to start a supermarket maybe. Brick and mortar stores, brick and mortar businesses today require what, 20, 30 lakhs to set up today? One, capital is 20, 30 lakhs. Number two, you have to see how much of your inventory is coming in. What is your inventory? How many employees do you have? You have to make them happy. You have to see if customers are walking in. Are the customers happy? You have to make sure inventory is replenished on time. A lot of variables, right? Then there is hartals and whatever political tensions outside and whatnot. And you end up making how much by running a restaurant? Probably these restaurants shut shop within months, right? Or if they might end up making 50,000 or whatever. And that's where with option selling, if you look at it as a professional business, you sit at home, you trade with no variable setup. The only variable is you do well with your strategy and with your trading, which is very simple in option selling. You just have to say, where will Nifty not go to? Right? That's all you have to say, do. And with so many less variables to lose, you sit at home and you make, with a 20 lakh rupees capital, 4% is 80,000 rupees. 4% per month is 80,000 rupees. You make that say 50,000 to 1 lakh rupees a month. Amazing. So that's how I look at option selling. It is a business. Let's not take it into the realm of trading. Then we'll have to talk about, hey, how much skill do you need and what all indicators do you use and all of that. Leave it there. No. Think about as an avenue where you have money and you have to make money or grow your money, right? So that's how I look at it. And growing money at 30% plus is amazing. Now, I always talk about percentages. The person who is known as the best trader in the world is Jim Simons, right? Jim Simons. So he's called the best trader in the world. His, I think some 15 years CAGR returns from trading is how much? 66%. So 66% is considered one of the best in the world. And when you can make 40% in India, I think it's amazing. You're in the top 0.5% of traders in India. And you're growing money at that pace, you have no idea over a period of 5-10 years what will happen to your funds, right? So that's the amazing stuff I'm talking about. Cool, now let's get into the foundation of the strategy, how I came up with the strategy, how I started trading the strategy, and then how I evolved over time, right? Now this might be very repetitive for people who know the strategy already. So I'll quickly go through it. I'll quickly go through it even for people who do not know about the strategy, but please feel free to ask questions in between. Now the foundation of the strategy is the fact that, hey, you sell deep OTM call and put options. Yeah, very simple. You sell some 6, 7, 8 rupees call and put, you sell whenever you want to. And whenever you sell options, make sure that you buy an option on both the sides to hedge your sells. And that's what is called an iron condor. So, familiar with the concept of an iron condor? A lot of people? Yeah? Right. So you sell a call option, you sell a put option, and wherever you sell a call option, by 200 points above that, you buy a call option. 200 points below your put sell, you buy a put option as well, right? That's what's called an iron condor. Now, I only do weekly expiry. I mean, I only do index to begin with, only Nifty, Bank Nifty, and I only do weekly expiry. Thursday is an expiry, so you sell it on whatever day you like. I'll come there a bit more about that. Number 2 is equal lots. How much ever lots calls you sell, so much lots puts you sell. Yeah, both calls and puts. And that's what a credit spread is, right? When you sell an option and when you buy above it, that is what is called a credit spread. So when you do a credit spread, your returns go higher. I talked about that yesterday. Your returns would actually increase when you make it into an iron condor. Lesser capital is what is required. For normal strangle, it would require 1 lakh rupees. When you make it into an iron condor, it would only be 45,000 rupees. And finally, the risk is also limited. If there is an unforeseen black swan event, even then your risk would be limited. Now, this is the foundation of the strategy. Basically, it says that it is an iron condor that we do. You sell a call, you sell a put. Wherever you sell a call, 200 points above, you buy a call. 200 points below your sell put, you buy a put. And do only for weekly expiries. This is clear? Amazing. Yeah. Now the strike price selection, this is what is very important, right? This is where people get confused. Hey, what strike to sell? What strike to sell is very simple. Sell a strike. Now this is the foundation. Now how I am structuring my talk is, I'll give you a foundation today. If you trade the foundation, I'm sure you'll make 30%, 20% an annum. No questions about that. Now, on top of this foundation, I'll give you some thoughts to upgrade this. Or you will, with time, you will feel that, hey, I could make such changes, and that's where your return will increase. We are only talking about the foundation here. So, which strike to sell? Sell a strike with rupees 7 to 10 premium. Simple. Sell a strike with rupees 7 to 10 premium, and also where you have a conviction that Nifty will not go till there. Say you're selling on the coming Friday. Nifty would be at around, say, 17,200. So for that week's expiry, Thursday's expiry, the question you have to ask yourself is, hey, where will Nifty not go up till? Probably we'll get an answer 17,700. Example. So that's the strike you have to sell. You also look at the premium. Premium, if it's around 7 to 10, sell it. If it's not around 7 to 10, then come a bit below and sell that. Again, I'm presenting it in such a way that this is again a pure mathematical, statistical and quant-based strategy. We are only going to make money with money management, risk management. Our views can go wrong. We are always playing non-directional. There will be big moves in Nifty. Our views will go wrong. There will be gap ups and gap downs which will kill us. But in the long term, you can make money because you're only playing with mathematics here. I mean, that is what quant trading is in the most cases, where there's no trading knowledge attached to it. There's no technical indicator attached to it. It's a pure mathematical model which is making money purely on statistics. That's what I'm going to give today. And with that foundation, you can make that foundation better by introducing technical analysis to it, by introducing other elements to it so that the system becomes intelligent. Otherwise, pure mathematics will give you money, right? I mean, there's this famous saying, there's this survey also which was done in the US, I believe. I mean, a monkey was asked to pick stocks. Anybody heard about that? Yeah, you've, right? Yeah, amazing. So, a monkey was asked to pick stocks. At the same time, some so-called fund managers were asked to pick stocks. And the performance of the stocks were compared after a few years. And very interestingly, in most of the cases, the monkey picked stock portfolio did better. So, that is what trading and investment is, right? If you diversify well and if you play with mathematics and statistics, you'll only make money. It's all risk management, it's all money management. So the foundation I'm talking about is pure money management. That's where I'm not even talking about any technical analysis, any market related stuff when I'm talking about what strike to sell. Sell a strike where the premium is rupees 7 to 10. Cool? Amazing. Now which strike to buy? So when you sell a call, you have to buy a call as well, right? Buy a call 200 points above. So if you're selling a 17700 call, buy a 17900 call. If you're selling a 16500 put, buy a 16300 put at the same time. Equal numbers. That's the strikes that you have to sell. Clear? I've dumbed this down a lot, right? Yeah, so this is how your trade will look like. Your call sell, your put sell. This is called a payoff graph. Doesn't matter. Doesn't matter. Yeah, so when do you have to enter the trade? I would say enter the trade on Wednesday and exit it on Thursday. You can still make 1% profits. You enter the trade on Wednesday, you sell a 7 rupee premium call and a 7 rupee premium put, and your buys are 2 rupees. So 5 rupees you're collecting from both the sides. Say if it all goes to zero, you're making 10 rupees a week. 10 rupees into 50 is 500. Margin required for one lot is 50,000. 500 by 50,000 is 1%. Yeah? So you sell on a Wednesday, you exit on a Thursday, you chill for the other days, you still make 1% a week, you make 3-4% a month, and you make 40-50% a year. As simple as that. And when I dumb this down to this level, people question a lot, saying, hey, is it actually possible? I mean, believe me, it is possible. I've been doing the exact same thing for a very long time, and I think a lot of people have been also doing the same, right? So it's very much possible. It's purely mathematics. There will be weeks where you go into loss. It's not going to be every week is in profit, right? There will be weeks, there will be months where you're in loss, but over the long period of time, it is going to work out, right? It's as simple as that. Again, this is the foundation. Just making things clear, I'm giving you the foundation. The foundation itself works, can generate 30% per annum, but then if you evolve the foundation, which I'll be talking about, it'll make stuff even better, right? Now, when do you exit? Very interesting. Now, when you talk about exit, there are two things to be done, right? You can either exit your profit-making leg because you have call side and put side. At one time, say, if market moves down, your call side will be in profit and your put side will be in loss, right? So you'll have to book profits at some point of time. So target for your profit side, that is the call side or the put side, is when the other leg or when the other side is showing loss of 1.5 times maximum profit. New. Yeah. Right? So you can book profits when the other side is showing loss of 1 times of maximum profit that you expect from that side. So when you enter into a trade, you have to know from your call side how much maximum and from your put side maximum profit how much you can make. Markets move down. When put side is showing loss of 1.5 times of the maximum profit you could have made from the put side, you book profits in your call side and sell a new call. Again of 7 to 10 rupees premium. Yeah? Is this clear? Sure. So, earlier example we took 7 rupees we sold, 2 rupees we bought. So 5 rupees we are expected to get, right? So 5 rupees into 50 is 250 rupees from the put side is what you're supposed to get per lot. So when this becomes 1.5, which is 250 plus 125, 375. So when this side's loss becomes 375, markets move down. When you see a loss on your put side alone, you have to monitor it separately. When you see 375 loss there, call would be giving some profits. Out of 500, it would have given, say, 300 rupees profit. Book that 300 and then move that down. Sell a new 7 rupees call and buy a new 2 rupees call. Something around that. Clear? Amazing. So you keep doing that. Yeah. But if that puts loss becomes 3 times of maximum profit, if that starts showing 1,500, no, 250 into 4, 1,000. When it shows 1,000 is when you have to exit that. Yeah? Then what do you do? When you exit the put side, what you have to do is you sell a new put of 7 rupees. Purely mathematical. When the puts SL is hit, you exit that side and then you enter a new on the same side. So this is what you have to do. And again, if it goes 1.5, then you bring down the call again. So keep doing that till Thursday. I mean, you start on a Wednesday anyway, so that's what you have to do. So most of the cases, maybe your SL might be hit, say, once or twice a month. It should be okay. Even if your SL is hit, you'll still be losing under 1% a week. And when you're winning, you'll be making 1 to 2% profits a week. So that's the risk reward of the strategy. When you win in a week, say if only one SL is hit, you'll be losing under 1% only. That's the money, that's the mathematics. When you lose, you'll be losing only under 1%. When you win, you'll be making 1 to 2% profits a week. But there will be weeks where 2 or 3 SLs are hit. There will be weeks where you are trapped in gap ups and gap downs and you will lose 3 to 4% of capital. But hey, that's okay, right? That's part of the business. I've lost multiple weeks where I've lost 5% profits or 5% of the capital. That has happened. Still, I've made 100% over the last 2 years alone, right? That's doubling capital in 2 years, right? So this is clear. Booking profits and moving down. And when you hit a loss, you book the loss and again you sell something on the same side. Clear? Yeah. Right, so this is what happens. Yeah? Nothing, cool. So this is what happens basically. So the orange line is your original payoff graph. So say if your call SL is hit, then you sell the new call and you move up the put as well, right? So it keeps on moving. If it has to move, it keeps on moving. That's what happens. But since you are entering on a Wednesday till Thursday, it's very simple. That's where the thing is, maximum maybe only one SL will be hit. How much movement can happen in 2 days, right? And still you can make 1%. So why did I start with just 2-3 days in a week? Because limiting my exposure to the market, which limits my risk, still gives me enough returns. I'm happy. I mean, there's no agreement that I should be trading every day because just the market is open, right? I need not. I'm trading, why? To meet my target, which is to make 40-50% a year. I'm happy with that. And if I could do that even with trading in 1 day, I would happily choose that. Why not, right? I mean, limited risk, limited stressful times. As I said, what I optimize for me in my life is happiness and peace of mind and not higher returns. I'm happy with this returns, right? Cool. Right. So this is the whole perspective I've been talking about. This is what the focus is on. And when you focus on something like this, when you don't sway away from this, you tend to make profits in the long term. Now, I've trained a lot of people. Now I don't train anymore. I have stopped my mentorship program. I've got bored of it, right? But I'm very happy to have really good students of mine who have even flown in from Dubai just to be a part of this event. So thank you for being here. I mean, really happy to have students like you. But still, it was a very difficult decision to stop mentoring, stop teaching people anymore. Just because I got bored of it, right? But this is what I have been always talking, teaching. But one thing I learned after teaching a lot of people is that people eventually end up losing money because they don't stick to something for long enough period of time. Now, this is my 5th time on Traders Carnival. It is very repetitive, very redundant. Even my energy is low compared to my first presentation. Yeah? You feel that? Yeah. Because I'm bored of this. But because you're bored of this, you shouldn't stop trading this, because trading is not for enjoyment, not for excitement. There's no emotion that has to be attached to trading. Trading is just to make money. I still keep trading this, but I've grown bored of talking about this strategy around, right? Anyway, so this is what is doable, very much doable. My point was, people do not stick to something. They get bored of a strategy, they look for more trainers, or they think that, hey, now I have this strategy, I probably think that I can do better. Yeah, let me come up with something new, let me experiment something new. Hey, there is this new indicator in town, let me learn about that and whatnot. And that fucks them up, right? And that's where people lose money. And that's what I've felt. But that doesn't mean that you should stop innovating. That just means that that's all capital allocation again. Larger part of your capital should again be allocated to something that you know works. And with a smaller capital, you should keep innovating. And that's what I did, right? And that's where from one discretion-based strategy, I've reached 5 different systems. Entering, exiting on different days, different instruments, making real good money now. Yeah? So innovation should be done, but innovation should be done very wisely on a capital that you can afford to lose, where you can experiment with. And now that's where I'll start talking about my experimentation, right? Now this is how I tried upgrading the system, upgrading my discretion-based system, and I tried to make it into a system, right? Now a system and discretion are very different. In a system, there are rules, entry rules, exit rules, modification rules, and stuff will only happen according to the rules. You can never intervene in a system and tell that, hey, I'll change it, I'll do this, right? Never do that. Now that was my first agenda. Hey, I want to make it into a system, and I have to start backtesting it. And as I said, when I started backtesting it, it opened a whole new world for me and it changed my trading journey completely, right? Because when I started backtesting it, it led to continuous improvements. I mean, whatever I could think about, whatever crazy thoughts I had, I could inculcate into the system, click a button, it would take few hours to backtest 2 years of data, but then, hey, I'll get the backtest data. Then I'll see, hey, this is what changed. Max drawdown became so much, the win ratio became so much. Okay, let me introduce some other criteria into the entry or into exit, then again, backtest and then get the result, look at it. So that's what completely changed the way I trade and the way we started offering our offerings as well, right? We have multiple strategies again being offered now only because of this. Now this was a leap that we took, but it changed a lot of stuff for us. It's very interesting. People who are into trading, you'll absolutely love the process. I mean, think about it, right? I mean, you feel that, hey, whenever some stuff happens based on some Greek or some technical indicator, just based on the foundation strategy we talked about, I want to exit. And the re-entry should be when this criteria happens. Something that you might have based on your trading knowledge, you can code that and you can backtest it and you can compare the result with our foundation. If there is some improvement, good. So you keep improving, right? So when you keep improving, you get multiple variations, entries on multiple days, exits on multiple days, a lot of things, and that is what changed me, and that change is what I'm talking about today, right? So now, one upgrade we did is, hey, we still have strategies which are entering on Tuesdays or Wednesdays, but then we have strategies which are entering on Fridays and selling higher premium options. Yeah? Throughout my life, I've been selling options below 10 rupees. Now I even sell options at 15 rupees. Yeah, it's something new to me. But again, when we backtested such stuff, we saw higher returns with, what would I say? Numbers which I were okay with, like max drawdown. I never wanted the max drawdown to be above 5%. But now a system we run with a max drawdown of 10%. But because its returns are much higher. But what you do is you mix multiple strategies, so it all works out, right? I mean, you trade with two strategies, you see, even by trading two strategies together, your maximum loss in a week is coming down. So it works, right? When you combine strategies, that also works. So yeah, entering on Fridays and selling higher premium options is something that we are doing now. That's an upgrade on the foundation that I have been talking about. Then having a logic for starting directional and then becoming non-directional. When I talked about the foundation, it was purely non-directional, right? I said on a Wednesday, market opens, you sell a call and put. Right? But now we have logics in the system where the system is directional to begin with, and eventually when the market asks for it, market demands for it, that is when we become non-directional. So that's one change that we could do only because we made it into a system, only because we start backtesting it. I mean, we could pivot, we could ideate, experiment, backtest, see the results and change within days and weeks. That's the pace at which we are operating today. Right? Diversification between indices, right? Earlier, I used to trade only in Nifty. Now I trade in Nifty, Bank Nifty, Fin Nifty. Now, all these comes into play when your capital is higher, when you want to diversify, having multiple systems really help. And finally, SLN target based on option Greeks and technical indicators. Earlier, what I talked about, this is what I talked about. The earlier one was purely mathematical. 1.5x, 3x. That's pure mathematics. You'll still make money. But when you bring in some market knowledge to that, right, that'll be even better. So maybe 3x when side goes to 3x, it might be a really good support. But when you trade purely on mathematics, market might be rebounding there, you might still exit. You might not have to exit. That's where in the SL you can, I mean, we started introducing, or we started having technical indicators and option Greeks and whatnot, so that the system becomes intelligent now. System knows what's happening in the market, and those are also things that we did, right? So these are upgrades that we did, and these are things that you can also look at. So again, for beginners who are not selling options and who want to start selling options, what I would say is you have the foundation very clear now. That basic foundation strategy I talked about, you can start with that. And when you start with that, you yourselves will feel that, hey, let me make some changes, let me make some modifications. And that's your discretion. With that discretion itself, your returns can go up to nearly 50% a year. Right. Now, this is something that we talked about in the beginning. Hey, why it had to be converted into a system, right? One is automation brings in a lot of scale. When it is a system-based trade, it's purely automated. I mean, the system will fire orders and entries and exits and modifications and whatnot. And that's where in the beginning I talked about, right? I mean, 120 crore plus funds is being traded on multiple of our strategies, and it's all automated. No manual intervention. I can chill in office. I need not even look. I mean, there are people to monitor positions, but again, there's a lot of peace of mind again back into the system. Point number 3. Again, that's what I'm optimizing for, right? I mean, that's how life should be, right? Life is not supposed to sit in front of screen and looking at charts and seeing each and every candle and being worried or attaching emotions to every candle, right? I mean, let trades happen there. Let us have fun on the side is one vibe that I have always had. And number 2 is also very important, right? When I started offering non-discretion or when I started offering algo trading for users, when there was a loss day, if I say that, hey, I felt so and I took the trade and it went into loss, that was not really confidence inspiring. People who know me may be okay, but for a larger audience, it was never okay. So when you back something that you say with a lot of data and with a lot of numbers, then that's amazing, right? So building trust, not among users, but again, among multiple of our stakeholders are also very much possible now, right? I mean, think about the funds which are lying around, so building trust is very important, is something I believe. And this is why we decided, hey, we have to change from discretion into system at one point, and that's where we took that leap of faith. It was really difficult. We had to hire a big team to do that, and this is what mattered more. Because being a discretion-based trader for a very long time, it was very difficult for me to change into or start trading a system, right? As I said before, it was very difficult. Point number 1, the battle between our discretion and the system's decisions, right? I mean, sometimes we feel that, hey, what stupid decision is the system making? As I said earlier, maybe the market is moving down and down and down, and that is where it will go and sell a put maybe. Just saying an example, where you as a discretion-based trader, you might have never taken the trade. You might have called that a stupid trade, but the system might end up taking the trade. But in the initial days, I had this problem. I felt like, hey, what is it doing? Then I used to exit the position, I used to wait, and then I used to intervene in that. Never should be done, right? So this is actually, yesterday someone asked, you asked, right? So he had that question, and I see that coming up a lot because times are changing. A lot of people are moving into system-based trades or automated trading. So this is a very relevant question in today's times is what I believe, where the battle between our discretion and the system's decisions. And that's where point number 2 matters. When you're trading a system, you have to trust the system. And when you're trading discretionary, you have to trust your discretion, right? Your decisions, whatever you feel in the market is what you trade in discretionary trading, and that's your call, and you have to trust your call. Trust yourself there. So it's two different, absolutely 2 different buckets. I do still trade discretion. I trade systems as well, but it took me some time to reach a position where I could do both at the same time, right? It was very difficult for me to trust systems in the early days. And finally, this is big, right? This is very big. Worry of seeing more than maximum drawdown in a system. Say you backtest a system for 3 years, and you see the maximum drawdown of the system is, say, 6% of the capital. And what if when you forward or actually live trade the system, and you trade it for, say, 6 months, 8 months, and you see a max drawdown of, say, 12%, which is above your max drawdown? What would you do? It's a very bad place to be at, because you backtested it. The maximum drawdown what you saw was something, and now you are above that. But that's also normal. I mean, a system can have new phases, right? A backtest doesn't always promise in the future also it will be ditto to the same, or it will never exceed the numbers. It will keep changing. So some variance is okay. But a lot of variance is where you should start looking at the system and you should tweak the system as well. But some variance is absolutely okay. But that worry is real. And finally, again, initial struggles were also solved when we had multiple systems. We started diversifying capital into multiple systems, and that also changed a lot. I mean, risk comes down a lot, and in profit-making weeks, profits also goes up a lot. So yeah, these were the initial struggles of transition, right? Now, yeah, I'll kind of end the session here by talking about the statistics of one very safe strategy, I believe, which is being deployed in one of our products, right? So this is a 2 years backtest here. So average profit of winning weeks here is 1.98%. Average loss of loss weeks is 1.6%. That's where the average risk reward ratio is 0.8:1. And the drawdown is just 7.22%. And this is it. So now our job is just to have strategies, look at it, analyze numbers, and keep running them, right? Now, I don't personally run this in my account, right? I run multiple strategies, and the largest one I run in my own account, my personal account, is one where the max drawdown is 10%. I even run that because the returns of that is insane, right? And now, I don't know how much relevant my talk is today for everybody, because most of it applies when your capital becomes really big. But I wish that for you, right? I wish that for you, that your capital also increases over time. And I mean, we know, right? I mean, there is access to capital around all of us. I would be happy if I see you helping others to trade as well, number one. And number two, the foundation, the journey is also something which I really wanted to talk about today, which I'm sure can help a lot of people aspiring to trade with higher capitals in the longer term, right? Starting with that foundation, which easily works, which is a pure quant-based mathematical statistical strategy, and then pivoting, making adjustments and changing and making it into a system, then diversifying with multiple systems in the long term is what is easy success, is what I believe, right? So yeah, that's it from my side. You can reach out to me via mail ID, Instagram, Twitter. I'm not active on Twitter. I'm planning to be active on Twitter at least from now on, but I hate the toxicity there on Twitter. I mean, I think in the last financial year, I tweeted only once, and even under that, there was a lot of hate, right? I mean, it just happens. But now, Fires has finally come up with verified PNL. Now I could put up my verified PNL and then be on Twitter maybe. So I'll do that. And finally, I have a phone number also. You can, I mean, it's not mine, but yeah, my manager's. You can reach out on that number as well if you need any kind of clarifications, doubts, or any of our offerings, right? So yeah, that's it. So what I would say is, one thing I've learned over the last 1 year, I'm not sure if Shijumon is here. Yeah, so Shijumon is here. Yeah, yeah. No, I was talking about something. So I was telling, in the last 1 year when I saw him, because I've always been in my world of option selling and making my happy 50-60%, right? But when I see reality of option buying, or actual trading, I might even say, when I saw him doing that and his mentees doing that, I understood that, hey, maybe if you have to sit in front of the system for throughout the day, then when you make so much returns, then it makes sense. But when you actually have to make 40-50% returns in a year, does it actually make sense to sit in front of the system? Right? So that's where I feel now that what we do is more of a mutual fund alternative, making 30-40% of your capital. And that's what I see a lot of people doing now, right? Because you as people in your life are having access to some capital. Say you have 10 lakh rupees capital, right? So I would say put 5, 6, 7 lakhs into, say, an option selling system, automated. Don't put in any job. That 6, 7 lakhs will make you 30-40% returns in a year. With the remaining 2, 3 lakhs of capital, if you really want to do that, sit in front of the system, actually try to achieve 100, 200, 300% returns in a year, right? I really feel bad seeing people now sitting in front of the system and trading with discretion, putting in effort to make 30-40% per annum. Does it make sense? When it could be automated and it's all easy. So if you really want to master trading, I think it's the aggressive styles of trading which you can master, which could probably change your life as well, right? You can make absolutely amazing returns. I mean, I've personally seen back office PNL of people who have made over 50 crore rupees the last financial year with 1-2 CR capital. So those things are possible. So if someone has to actually sit in front of a system and trade, I now have a realization that, hey, you should aim for the moon there, not limit yourself by 40-50%. 40-50% could be automated, you could sleep over it, nothing to be done. Even if it's not automated, you shouldn't put in a lot of effort doing that, is what I believe. And that's how I live by today. And that part is what we are best at, to have strategies which can easily generate 30-40-50% a year. And that's what we are planning to scale in the coming days as well, right? And that's where I can help you also. If you have extra surplus funds which has to be grown like that, that's where I can be of help, and that's where my expertise is. So yeah, that's it again. If DJ is here, thank you very much for the opportunity again. But I'm open to questions, anything. Mostly related to option selling, risk management, money management. Oh yeah, so it varies, right? I mean, it depends on the number of strategies that you want to have and the kind of risk you're willing to take. So we could talk about that. Maybe anything related to that foundation so that you can build on that and you can get better. Making 1% a week is a piece of cake is what I believe. Yeah. Yeah, FinNifty, you can do the same. Bank Nifty, it's very different. Bank Nifty, you can't go for that, but FinNifty, you can do the same. It's very similar, right? FinNifty and Nifty are at similar level, 17,000, 16,000, so it works.
So this foundation can apply on the
FinNifty as well.
And so two
Absolutely. So you can do Monday, Tuesday in FinNifty and Wednesday, Thursday in Nifty.
So there is any delta or you look for selecting the strike or just a price only?
Just price is enough. Yeah, to begin with, just price is enough. So when you start just trading on the price, you'll understand that, hey, a few things you'll figure out. A few of your technical analysis knowledge or whatever you'll understand, you can start applying that as well. Even if you do not apply that, this will make money. Yeah. Right. Cool. Yeah, I hope that's it then. Yeah, we could take questions outside as well. So thank you everybody for being a wonderful.
I just have one question. Yeah.
Where are you?
Here. Hi.
Yeah.
So when you were developing these strategies, right? I mean, a lot of other traders spoke about how when you're backtesting, with changing market conditions, you cannot like sort of predict the returns that you'll make in the future. So can you talk about some of the challenges that you faced when coming up with these strategies?
Not much, right? I mean, for option selling, I would say market cycles, I would term them as changing VIX scenarios. So when VIX changes, where you get enough premium changes, right? Say VIX is very low, on a week you will be selling very nearby strikes, right? So we have some models where those are not really performing well in low VIX environments. So that's one correlation study that we do, correlating with VIX and seeing where premiums are. And how we understand that is also looking at the ATM straddle price. So VIX alone is not an indicator of how good the premium in the market is. There have been scenarios where VIX is comparatively less, below 15, still premiums were juicy. So what we do for correlation study is also ATM straddle on a Thursday opening or on a Wednesday evening. So you compare that to every backtesting months or weeks that you do and see, do a correlation study of, hey, where was the ATM straddle price on a Thursday opening and how did the system work on a Thursday. So that gives us an understanding of, hey, is the performance dependent on the juiciness of the premium that you sell. So that's something that we do. I think that is what matters to the kind of strategies that we run, right?
So you run primarily VIX-based strategies?
VIX. No, the strategies are not based on VIX, but the strikes that we enter now are a lot influenced by VIX. So we do a study based on VIX and straddle premiums to understand in the backtest, depending on VIX variations, is there a variation in the strategy's performance also? That's something that we study.
And since you were a discretionary trader for like majority of your trading career, can you talk about some of the challenges that you encountered when, you know, transferring that into a system process, converting into a system? Yeah.
Converting wasn't a challenge, but then again, as I said, sticking to it after deploying it in the live market was a challenge.
It's majorly the psychology.
Yeah, correct.
Okay.
It's all psychology. Converting is easy, right? I mean, it's a very enjoyable process. If you're someone who enjoys trading, you'll enjoy it a lot because whatever you could have imagined earlier, you could test it and see how it would have done over the last 2 years and make some tweaks, make some changes. And what will eventually happen is you'll end up having multiple variations of strategy and you run it on different indices. You say maybe the performance is getting better and that's really nice.
Yeah. Okay, thank you.
Yeah. Yeah.
So in the strategy which you discussed about the fundamental one, you said the SL is 3 times of that. So 3 times is inclusive of the profit which you make on the other side, or is it independent on?
It's independent.
Independent.
Yeah.
So let's say if the net credit is 5 rupees, at 15 rupees we are out.
At 20 rupees.
Okay.
Because 5 is already yours. 15 on top of 15, 15 on top of 5 will be 20.
So, yeah, okay. So
yeah.
15 minus, that is 15 loss.
Correct. Yeah, that's where you have to be out.
Okay. And let's say when you do this 2-3 times, let's say the market is trending, you would have brought the other side profit 2 or 3 times.
Yeah.
Still you will be out at 15.
Yes.
Okay.
Right.
So that's totally
You'll be out of at 15 and then you'll sell a put again. If it's coming down, then you'll be out at 15. Then you sell a put again.
Put again at 5 or 7 rupees.
Yeah, right. Depends on the market. If it's happening on a Thursday, afternoon, you might not be finding something good at 7 rupees.
Correct,
You
that's
might be
because-
selling something at even 4 rupees. Yeah.
Okay. And when do you exit this?
By Thursday evening only, 3 p.m.
Thursday?
3
And the entry is Wednesday morning or?
Wednesday morning. You could even enter in Tuesday mornings. I used to enter on Tuesday mornings earlier. Then I thought, hey, I'll reduce the time in a trade and
Exposure
optimize
less
for
risk.
even more, less risk and less exposure. So Wednesday morning works very much.
Okay. Thank you.
Did you try this one on the bank nifty? Or what is the challenges you faced on the bank nifty?
Right. So
Same
discretion,
strategy.
I tried on Bank Nifty. There was a phase we used to trade on Bank Nifty as well. Then with discretion, I left Bank Nifty because when you're trading discretion, you're looking at the charts and you're reacting to movements. And Bank Nifty makes a bit more movements is what I believe. So you'll have to react more. And a lot of reactions can go wrong. So with discretion, I still do not trade Bank Nifty. But the systems, we have a lot of systems trading Bank Nifty now. But discretion, I don't.
What about taking the same strategy on the next month strategy actually?
Yeah, so those are stuff that we are looking at, but again, higher amount of fund, what we need is liquidity. So next month's premiums now or strikes now wouldn't be that liquid in the level that we would like, right? So those are stuff that we are currently not looking at. Yeah.
Thank you.
Cool. Any more questions? Done. Amazing. So yeah, thank you very much. So yeah, you've been amazing. I hope I could deliver some value to you today. Yeah. And again, available outside for questions. Thank you very much.